Everyone, I thought I would do a welcome to December live stream. We haven't done one in a few weeks, so I thought it would be a good time to do some recapping on the market because things are ever changing. But right now, I'd say the market is very interesting. I'd say more interesting than I've seen it in a while. A lot of dynamics going on. So as people get into the live chat, I want to just welcome you to this live stream, and love to hear where you guys are from. I am always excited to hear about like where in the country you are, where in the world you are. There are a lot of people that I know watch from different countries, and so different time zones and all that. So I love to hear from you and talk about any questions you might have, answer any questions you might have. I think there's a lot to go over. And again, I think I tried to make some predictions in the last few months that I think some of them have come true. I think it's hard to predict what. Oh, hey, Tamur, is that how you pronounce it? From to Austin? Awesome. Hey, how are you? Uh, Thank you very much. Thanks for. I'll throw that up. Thank you very much. um, uh, do you live in Austin? Are you from Austin? Are you moving here? Are you just checking out Hampton Roads, Virginia Beach? But I know a lot of people may have been listening to me talk about projections on what I think 2023 is going to look like, the market as a whole. And I got to say that based on what I'm seeing so far into the last quarter four of 2022, a lot of what I thought was going to happen is happening. What I was projecting back 3, 4, 5 months ago was that there would be a decline. That's not a shocker. Who else was saying that? Just about everybody. The question was going to be what would happen next. Between September, October, November, what would happen after those months, or even during those months, and what should you do about it? And I showed you some statistics showing that hey, over the last 15, 20 plus years. Every year, the prices of, I say, median sales prices of houses in the Virginia Beach area have gone down from the July, August time period into the December and January time period every year. And I thought that people would take advantage of, the news stories of market drop, market crash, interest rates up, what's going to happen with the market, back to 2008, all this stuff. And my theory was that based on the fact that this is often a cyclical thing, every year the house prices do what they're doing right now. And so my thought, in my mind, suggestion is to not be alarmed by the other news that is trying to be very anecdotal about, okay, this is something that can get someone to click on my story. So what happened? September. Well, first of all, I will say what I thought would happen was that in September through November ish, I would say that prices were going to drop. I said in the median sales price in the Virginia Beach or the South Side in the peninsula, going through the Williamsburg, Newport News area, was in the I think it was 315 in the September range. And I can go back and look at the stats, but I thought it would drop down below 300. The median sales price would drop below 300 for any type of house. Again, there's a lot of houses that are way more expensive than that, but median for all houses would be under 300. And I think before I was targeting like the 290 range, 290 to 295 in that kind of in that bracketed area. Well, look what's happened. Going back, I'm going to share my screen here. Every time I do this, I have to relearn how to share my screen. Excuse me just one second. Well, hang on. There we go. Okay. So now we're going to go back into the analytics of the sales price of the median sales price currently in November 22. This is new data, just came out this week. So 294, 450, right in that range of what I was thinking. Okay, so if you notice, looking at the chart, then the top part of this chart shows 320 in June, meaning that the houses in June that closed sold, and most of them sold in May. So going down, I said, hey, this is going to be into the 290s, and don't be alarmed. This is going to happen. Looking back at these past statistics, these numbers, look at this chart. It's telling you a story, and this story is the same. So what I did think, though, was that I thought that the drop would be in the 290 to 300 range, 295-ish range, but that would be in the December and January time period. So what is this showing me now? First of all, rates have continued to go up between September, October, November. Looking at the rates, looking at this chart, this is over the course of uh, I guess forever the 70s for interest rates. This is the Federal Reserve that's showing statistics of mortgage interest rates in the past 50 years or so. And if you look, this is where we are now. The rates shot up. And you see April, May, June, we're talking fives, and then boom, September, boom, it's 5 into 6, and then October into 7, and then it started correcting, right? So the 7 range, I have not seen that since I started in real estate in 2006. I started to see it drop just below that number in that range. So it's been over 15 years since I've seen that. It shot up that much in a matter of months. So what happened? The prices corrected more than what I think thought would happen that quickly. Now, but we're going into a cyclical time period. It will still continue to happen for at least, I'd say, another about a month or so. But what's happened is that I'll zoom in a little bit more. The interest rates have dropped, or they're correcting. So you saw like almost like what seemed like the top of that. This is a bad example, a bad way to show it. See that drop right there? This is what I'm showing you right here. November 10th to December 1st, less than a month, it's down about a half a point. That is showing potential signs of correcting. Why does that matter? It matters because while house prices have been dropping into November and going into December, they might not correct that much more in relation to how much they often might correct in the Christmas time period. I think that they still will, but I don't think that they will as much, potentially based on if this continues to drop some more. However, they will continue to, I think, into the January time period. So going back, you can look at me again. There we go. Andy says, well, I'll stop for a second. Virginia Beach seems so nice and inexpensive a few years ago. Now it seems like it went up quite a bit. It did. It has gone up quite a bit. As you can see there on the chart, it has. But at the same time, it's all relative, right? It's depending on what your needs are. I mean, a lot of people that come here have been coming here from different parts of the country and world because they want to have nice, cheap, or affordable beach, or access to beach, and access to multiple seasons, and access to other large cities nearby. So it's hard to find that and then not be in a too far southern area and be super hot in the summertime or a longer period of time. So I think that is one of the reasons why it's still, to me, relatively affordable, but it has gotten a lot more expensive. I'm not trying to sugarcoat that at all. But my point in saying all this is to say that I still think that the prices have some ways to go for about another month. And if you look at this chart, the 294, 450 number, that is probably going to go down, I think, now into the 280s range. Even with interest rates going down some more, and even if it goes into the 6s and even back into the 5s, which we're starting to hear more of, that 5% range could be a target to where it might settle in the Q1 time period, which would be great for people. Hundreds of dollars a month cheaper for the same price house. Big deal. But even then, because we're in December, I still think we're going to see a drop. This is why I think, and I've said this probably every year for a long time, is buying a house in the holidays is the most inconvenient, is the most stressful, a lot of times, is the most, I'll say, family jostling. You're in the middle of the school year. You've got so much going on, even just with holidays and family, traveling, and then moving seems like a very inopportune thing to do during the holidays. That is why people don't do it. That is why it's a great time to do it. If you can zig when other people zag, you get the best price. Now, again, not everything is about price, right? I will tell you that in the last few days, I'm seeing offers getting accepted significantly below asking price. And I say significantly, I'll show you what the average median sells, or I'm sorry, find the list percentage of, hang on, just a second. Settled sales, average sales price, median average percent. There we go. Average percent of list price received. That's what I was trying to say. 99.9%. What is happening here? So you see this big drop. We're going to 102.8. This is over asking price, multiple offer situations. But what's happening is we're back down to 99.9. That is still telling me that even though it's still much less than what we were talking about before, 99.9% is still we're basically at 100%, basically at asking price. Now that's a huge difference from 3 months ago, but houses are still selling close to what they're being listed for. Now, that does not mean that the list price is the accurate price, but you can start. That's why you talk to a real estate agent that knows what they're talking about. Whoever you're working with, if you're working with somebody, Talk to them and find out what they think about the market in the specific neighborhoods you're talking about, because you can have a house that's listed for a certain price, but just because it's listed for that amount does not mean it's worth that amount, right? But 99.9% gives you an indication of whatever the price is listed at currently. That is right about the amount that most houses, or on average, houses are selling now. So if you can get a house cheaper than that, great opportunity. I'm talking 1%, 2%, maybe even sometimes 3%. Get closing costs rolled in if you want to. I'm not as much of a personal fan on that, but for bunch of different reasons, but you can do that too. That's happening more frequently now than it used to be. Not every house, but a majority of houses might have that option. So you're not seeing houses that get 10 offers as much anymore. You might see some that might have 2 or 3, but more might just have 1 or none, and it might sit for a while. So you're seeing this the drop become more of a reality. You can get better deals. My point, in as well as to say that, is to say that in the December time, that number, that 99.9%, is going to drop. Every number, in my opinion, in December is going to likely drop as far as showing the data, as far as the market, the price, the valuation of property. It's going to show like the market is continuing to settle, which it is, because it's in December. So take advantage of that if you're a buyer, because there are fewer people that are looking in the same time. And that means usually you can get a better offer if someone's got their house listed in December. Often it means that they might be wanting to sell faster and they're ready to go. Then you can take advantage of that too. If you can close as fast as possible, these are great things to keep in mind, so that you can take advantage of the opportunity. So you can lock in the price now, and then as prices drop, there's a potential for refinancing. I'm not saying that it will. This is the part of this that is so hard to tell. Their interest rates could continue to go up if the market bounces back even more in January, February, and March. They might raise rates again, based on what they're seeing in the housing market. That could be a possibility. So there are a lot of unknowns here, but I always am a big fan of buying in December, even buying in January. What I will say though is that once we get into the January 5th, well, first of all, once you get past January 1st, the buyer pool increases. There's always a bump right after the holidays. It's like people are just waiting for that calendar date to come. But January 15th is kind of the next benchmark from there. And then going into February is the next benchmark where more people will start coming back into the market ready to buy. And that's when prices will continue to rise, going back to the charts, going back to let's go back to the median sales price again, where this number, what is that? There we go. Going back to when you go into February, March, closings in April, closings in May. You see these prices increase every year, even when the market was in a downturn. And from 2007, 8, 9 over to 13, 12, 13, those prices were always highest in the spring. So this is why I'm a huge fan of getting a house in the winter. We did this. We got our house in late November and closed in late December. Just fewer people. Now, on the flip side, there are also fewer houses. Now, not just fewer houses, but a lot of times it's hard to find that perfect house, because a lot of people that are listing their house and they know they can get the best value, and they are planning around, like, for example, school times. They'll wait to sell their house in April or May or even March, And so there's two things at play here that are competing that might not always make it as advantageous. But if you can find the right house that you love right now in the next month and a half would be a good time to do it. Now the question then is, what's going to happen going into quarter one? Well, I'm no master at this. I'm just looking at the data and looking at the story that the charts are telling me, is that the prices are going to continue to rise after we go into January. So looking into, for example, 2019 into the end of middle of 2019, the prices went up. What is that, about 12, 13%? Let's just use a random year. 2014, 180 up to 218. That is 38, which is about, that's 20% increase. So I think this is going to go down into the 280s before the year is up. I think we're going to go back up into the 310 range by the time we get into the April, May, June-ish range. And I think that could be realistic / conservative. If interest rates are going into the 6s down into the 5s and they camp out into the 5s again, the difference between a 7% interest rate and a 5% interest rate for a $400,000 house, is going to be around, you can fact check me on this, but I think we're talking closer to around $700 a month. I can go back and look to make sure, but you're talking several $100s a month difference in mortgage payment, maybe six something. So that's the difference between buying a house that's 400 and buying a house that's 500 or 300. That difference in payment, that's how much of affordability you get. I'm sorry, it's more like five. I apologize. So the same idea. It's about $75,000, I think. Don't quote me on that one, but you can do the mortgage calculator though. But it's going to be about, I'd say, like the equivalent of buying a 400 house as opposed to buying maybe a 320, 325 house. So there is a big difference. My point is that those prices, as they continue to go bounce back up again, you'll have a cheaper rate, that's going to factor and influence the demand more. So again, back to, if you can get the house now, refi later. If you're going to keep the house for several years, I would suggest getting it now if you at all possibly can. Now, as far as selling goes, I would probably wait for the same reasons I'm telling people to buy right now, or suggesting it at least. I can't tell someone to do something. Sorry about that. But I would say that I suggest people to wait and list their house for the opposite reasons, because, hey, if you're looking to get the most for your house, it's probably better to wait a little bit, just as we let's sort out the winter time. So I'll go back to the comments for just a minute. I have some family. Oh, hey, Timur in Chesapeake, and I subscribed a while ago, and I just thought I'd stop in and say hi. Thanks for the vids. You're welcome. Hey, I love doing them. I will continue to do them for the foreseeable future. And it could be for years and years and years. Hey, Rebecca, how are you? Lots of opportunity. You are absolutely right. Great to see you too, Rebecca. Yeah, thanks for stopping by. Which is why you buy now and refi when rates go down. Yeah, I agree with that. It's hard not to argue with that. It's hard to argue with that. However, I guess the question to me comes down to, how low do we think they're going to go? Just like when you buy a stock, so to speak, you're buying it and say, hey, I want to buy it and expect it to increase. Well, sometimes if you buy a stock and it drops, they call that kind of holding the bag. You could buy a house with an interest rate and then kind of hold the bag and it doesn't go down, and you have the rate that you wish you didn't have at the time. However, if rates continue to go up, it might be a better story for you, because in that case, you're buying a cheaper interest rate now than you would have if the rates continue to go up, if that makes sense. Anyways, Benjamin, with these higher rates, every 10,000 in purchase. There we go. Yeah. Right. No. I hear you, Benjamin. There's around 70 months of payment. Yes. Exactly. Now, what I was saying is that does change as the rates. So roundabout way, yes, that's kind of the rule of thumb. Now the question, I guess, would be that as if you go from, I'm doing this on the top of my head, but if you go from 7 to 6 for the same price house, how much payment that is that? And I just can't get the actual exact number in my mind, how much the difference that is. And that's where my mind was at. But yeah, that's the rule of thumb, is exactly that. And that's including taxes and interest, for sure. So let me go back to what I was saying before, which was I want to add some more stats to this. And so we just got through the median sales price. I'm going to go back to median days on market. So this is something else that's changed, and you see the number increase to show how long houses are continuing to sit for a little bit longer. 18 days. Okay. 18 days is the longest, or that I've seen it. Like you can see here, since early mid 2020. However, even in the two busiest times or the busiest markets, notice in December 2020, 17 days. In December 2021, 16 days. Now we're in October 2022, 18 days. This is going to probably go back up into the 20s, low 20s. But my point is that even in the last 2 years, when the market was nuts, that number was still going up. It went up more than double in 2021. It went up, let's say even 2020, it went up, only 33% in 2020. 2022, it's gone up 200%, which is not, it doesn't require that much to go up 200% when you start at 6. But my point is that it will continue to rise in the wintertime. It will drop back down probably somewhere around the 10-8 range, if it's my guess, in the early to mid 2023 range. So this is my point in also showing you this is that remember back in the height of the 2006, 7, 5 market, well, prices let's just show you the median sales price back in 2005. Look at this. The peak in 2006 was July. The peak in 2007 was June. So the peak of the boom of the market was in those two time periods. Let's go back to the median days on market. In that same time period, the days on market for those houses was 33, and about, what was that, 48? So that means that in the height of the market at that time, it still was taking a month to sell a house. So point being is that supply was increasing at that point. So month supply of inventory, I'm going to show you something here. That same time period in 2006, 2007 was in the 5 month range. Right now we're in the 1.2 month, I'm sorry, right at 2 month range. What this means is it's showing the amount of houses in relation to how many buyers that there are. So if there are 100 houses, it's going to take 2 months to sell those houses based on you see it right here. Month supply of inventory is the number of months it would take to sell through the available inventory at the current sales rate. So what's the churn rate? How long will it take to sell all the houses? So we have a supply issue still happening in relation to even past years. So all the talk about prices settling and staying there, I'm not so sure about that, because it seems still to me that there is a significant supply issue or relative supply issue at least for this area. That does not mean that places like, for example, I don't even know, Phoenix, maybe I'm not as privy to the data for other cities, but there are probably 5 to 10 cities in the country that have seen a lot more drops quicker. Now, their prices probably also inflated a lot faster as well. So you got more helium in the balloon and more that can be let out. Our market didn't really do that as much. It was very active. It's been very competitive, but it has not been to the astronomical, to the moon, as you might see in places like maybe San Francisco, or places like Phoenix, maybe, or other places like that. So you see the significant correction with those cities, and then significant jumps with those cities, but then significant corrections more so as well. And then with here, the jumps were not as great. And then by default, you often find that the corrections, if there is one, will not be likely as much either. So you see that the supply is low. You see that the median sales prices have been dropping. So that tells me that once demand continues to go back up again into the January, February, March time period, that I think we're going to start seeing prices bounce back up again, like I said before. One more thing I think that's interesting to know, that is more of a theory that, hey, test me out on this, see what you think. But looking at this number here, it says November 22, 99.9% of average percent of list price received. So meaning that if a house lists at 400, good chance it's going to sell right at 400 or just under that, right? So I ask myself, as prices drop, how is this this percentage still as high as it is in the middle of December and January, or in November, December? One of my theories is that, and this is what I'm seeing from people too, as I'm talking with people, is that it does seem like while there are less buyers, people are wanting to and ready to buy as long as they find the right house that they want. People are not as in like a desperation to just find any house that they want. But when they find the house that they want, they'll go after it. And I think that's what this number to me is telling the story of right now, based on the market that we have now, is that people are actively looking, but they're speculating. Well, not speculating. They're kind of watching sort of on the sidelines to wait for the house that they like, as opposed to just going after any house that's on the market, which makes sense. And I'm fully in support of that. So let me go back to let me post here. If you have any questions, feel free to throw them up. There you go. Post questions in the chat. Still learning my streaming software. Bro, here. Oh, I saw your comment earlier. Thanks for commenting on my post. You guys knew I think I got sick last week. It was rough for like 24 hours. It was rough. I wonder if we're headed up or into more of a stable market. Yeah, good question. I don't know. I think it's going to become more stable. I think we're doing this yo-yo, like you saw in every chart with every graph. It's doing a yo-yo, and I think it's going to stay that way for probably the next three. Well, I say 2 to 3 months, and I think eventually it's going to level out. But I think there's going to be some random, news stories going to freak everybody out, I think, and it can be hard to kind of navigate this. But I think that we're going to head into more of a stable time, at least for the after we get past the February, March time period. I think once rates go down into that lower 5 range, if that is what's going to happen. Buyers are pickier right now for sure. Yes, they are, and I'm all for it. 6 months ago, when you had to see a house as soon as it hit the market and you had to make a decision in 20 minutes, not a fan of that. I agree, stable. Absolutely. Let me show you something too, going into the rates again, because I think this is hilarious. So looking at this is a average commitment. When I say commitment rate, the mortgage interest rates since, I guess it's 1970. This shows every month rates between November, December, January, February. You can see the change in rates, right? So look at every month and every year. See the average for that year: 3.94, going back before 3.99, 3.65 back in 2000, and was that 17, 16, 3.85, 4, 3.89. Like it's kind of ranged there for a while. Then it dropped down in 2020, right? Well, then 2.96, 5.08 is the average in 2022. And that's after 4 months, 4 months of being under 5. And really, the 5th month, May, being 5.23, we're starting to go into the close to 7. I will tell you, once the November numbers come out for these averages, I will tell you for sure it will be in the low 7s, almost assuredly, which will push this up into the 5.2, 5.12, or 5.3 range. The last time that happened was back in 2009, as far as an average goes. But the last time we saw a 7% average rate, look back. Do you see any 7s on here? No. 2002 was the last time. January 2002, March 2002 was the last time we saw 7% average interest rates. And that's a long time ago, 20 years, even through the last boom. So I think this is going to correct in a little bit. They're trying to curb this inflation. I think it's seemingly starting to work a little bit. So I think it's going to come back down to the 5s for that reason. So if you have any more questions, please let me know. I'm going to also, while I'm here, include some more information about areas and locations that I think are worth targeting as we get into the winter time period, as these price fluctuations happen. And I also want to show you right here, if you can see on, can you not see? Oh, you know what? You guys are watching and I didn't show you the right screen. I'm gonna go back and show you what I'm talking about here. I don't think you can see. Let me know can you not see the other chart that I'm trying to share? I don't think you can. And forgive me for that. I think if that is the case, I'm going to share a different screen. And whoops, excuse me. I'm going to go here. This is what I was trying to show you, was this right here, showing this. This is what I was trying to show you. Do you see this chart on the screen? This is where the interest rates chart was going to be. So if you see here 7% in November going down into the 6.49%, this 0.5% here, this drop is just in less than a month. This is what I'm talking about, is what I was trying to show you as far as the quick drop and the quick rise and the yo-yo effect happening with the market. So my point was to say that in previous years, we've not seen 7% in about 20 years. Look at this. See on the far right side of the screen, down here, right there, draw a line over 6%, 7%. Once you get close to that top line right there, the most recent time was right at about 2002. And so it's been 20 years since we've seen it this high. And so I think it's going to correct itself at that point. So that's what I was trying to share, but I did not share it well, did I? I'm going to go now show you the map and also the MLS that I think will be helpful to show you if you want to see some up-to-date, accurate data of current time for how much is happening in the market right now. I'm going to show you this. You see, this is the cover screen or the homepage of the MLS. And you can see here, you see this is the amount of houses that have been posted in the whole Hampton Roads area. New listings today, 73. Not too many on a Wednesday. Now prices decreased, 53. Back on market, 10. You're seeing that some, but pending still 57. So you're seeing a little bit of still a balance. I'd say there's still a relative balance as far as supply and demand for right now, which has led to, again, that's why you're seeing it's come more to a balance. But with that has come still the reduction of prices, because you see that scale still tip to the other side as we go into December and January. And I think that's going to continue for a while, for at least the next couple of months. So let me go back to the map I was going to show you next, which was the Google map, and zoom out and talk to you about one thing that I've been asked about several times, which is new construction. Because as people are looking to buy in the 2023 time period, they want to decide, hey, do I want to buy now, or do I want to get a house under construction and then wait for it to close once, I move to the area, or once, I wait 6, 9, 12 months. I will say though that here, I'm going to share that Google map. I'm going to get into some specific spots to focus on, and let's go into here, and you'll see here. All right. Number one is I'm going to share is Virginia Beach. There are not many houses, new construction wise, in Virginia Beach, period. And the reason that is because they've got gobbled up pretty fast, and there aren't a lot of places to build. So if you're looking for new construction in Virginia Beach, number one option is Pungo. Pungo's down here. I've talked about Pungo a lot in multiple videos. This is all country, and this is where you get the most access for land, larger acreage, 1, 2, 3 plus acres off of, and more like agricultural land too. You see a lot of that down here too, more farms. So Princess Anne Road going all the way down. If you want new construction, a larger house, custom houses, this is where you're looking. I'll drop a pin because it potentially will show you custom homes randomly across. Say, there you go. There's people that just build random houses along the side of the road along Princess Anne. So that is very normal, and you'll see houses with more garages, houses with more yards. So because of that, it will allow you the ability to build more, like larger houses, a little bit higher price, 6, 7, 800,000 a lot of times, but you get more land for it and more accessibility to garages and whatnot. Otherwise, there are not too many new construction neighborhoods right now. You're going to see one in Princess Anne Meadows, which is over off of Princess Anne Road, close to Independence, and going over here near Dam Neck. This, where are we at? There we go. It's over here, right here. This is one that it has some in the back that is still being built, and some that are being finished, like in the 7s and the 8s. In my opinion, unless you want new construction in Virginia Beach, I think these are I think they're kind of bland. I'm going to be very honest with you. Someone might not like what I'm saying, but the lot sizes are not huge. You're paying for new construction. You're paying for the newness of being in the location of the middle of Virginia Beach. I'm just not personally a big fan, but I get it. It's new, and it's the scarcity of it, right? It's a very convenient location. I will give you that for sure. And if you like golf, you're close to one of the nicest golf courses in the area, Virginia Beach National, just down the street. But that is one of the primary neighborhoods that is single family in Virginia Beach right now. There are some more in Chesapeake. That's where you're going to find most of your new construction. It's going to be in the south part of Chesapeake, into closest areas close to Edinburgh, which is if you go further south into South Chesapeake, in like the Hickory School District and Grassfield School District. I think this is Grassfield. Hickory, excuse me. You'll find some new construction over near the Walmart, and over back, this is over near Edinburgh Commons. There are some all through here, and then going a bit further north. Otherwise, those are going to be in the 5s and up. Why are they so cheap, Sam? Well, part of the reason that you can get cheap houses, cheaper new construction in the South Chesapeake area is that one of the neighborhoods is a condo neighborhood, but a detached condo. So this is Dragus builds this neighborhood, Hickory Manor. Great houses, like they look great. I just would say that the drawbacks here are that it is a condo, so you have to be aware that the backyard, so you don't own with a condo, you don't own necessarily the property that the house is sitting on. You own the structure, so like they'll take care of the yard for you, like the front yard, but it's not yours. That's why it looks like it's yours, but it's not. So that's one thing that people have. I talk to people. That's one of the drawbacks I'd say that people don't like about that kind of neighborhood. But otherwise, you can get a detached new house for under six or in that six range at this point now. Not necessarily as much in the low fives anymore or mid fives, but in that range. But I would say if you're going to be doing new construction, I'd focus mostly on Chesapeake more than Virginia Beach if you are focused on school districts. Otherwise, you can get cheaper new construction in Norfolk. And some of the better water area access, new construction or newer construction is going to be near Ocean View, where you can get bang for buck some of the best spots in the area. However, part of the drawback is that one of the reasons is that some of it's kind of, it's very hit and miss as far as how the neighborhood feels. Like it's just an older part of town, but you see more newer construction along the coastline or even a couple blocks off, but it's very individual spots. It's not like there aren't a lot of neighborhoods that are just subdivisions. However, the Turn, EDC has the Turn, which is, I think they have a few left, I think, just off of where we at? Right here off 21st Bay near Pretty Lake, near Shore Drive, right here. There we go. You can get an access walk to the beach from there, but that's near East Beach, which is a great neighborhood. But again, there's just not a lot of new construction in the area right now. But if you want new construction, the amount of time it will take will probably still be in the it's not going to be 6 months, in my opinion. It'll be 9 months still, is my expectation. You'll still see some that are under construction now that will probably stick around. I'm sorry, that will be listed and available faster, because it's not like back 6 months ago where you had to wait on a waiting list because the lines were, out the door for new construction. It's not like that anymore, but it's more still the scarcity of the elements of what options there are. There just aren't that many options. So you just got to take what you can get. And if you want it, you may still have to wait a little bit to get the right location of the right lot. So otherwise, a little bit cheaper, you can go over into West Chesapeake as well, over near Western Branch. I still love that area. You can go North Suffolk, Carrollton, some other good spots as well for that new construction. Otherwise, going into Hampton, Newport News, there aren't as many options there either, but you'll still find some individual houses that are built on pre-existing lots. But again, it's so scarce. So in my opinion, I would do something that is pre-existing and you can get into and maximize the rate if you can, and also maximize like the location as much as possible, because usually new construction is not as negotiable as pre-existing. So that's why, again, in this situation, in this time period, I would suggest going after a house that is owned by somebody to where you can get to usually a little bit better of a deal, in my opinion. So you have any questions about the market, about what I think is going to happen, about what I think, about areas to focus on? Let me know in the comments or in the chat. I can help you right now and talk you through that. And otherwise, I think that my projections are going to be 310, 315 range is going to be, to me, what I think will be the median sales price in Virginia Beach in the South Side and Peninsula area combined for, I'd say, in the next couple of 2-3 months. And I think that's going to probably spark some, hey, is the market back? The market's recovering. Well, okay, yeah, sort of. But point being is that this was, again, a cyclical thing, and we're going back into the springtime again. It's going to get more intense. That's just the way it works in the springtime. So I think this number is going to go back up into the closer to the top of what we were in 2022. To me, probably more like in the 315 range, just below there. But so I think we're going to do possibly a double top up there near the 320 mark. So I think if you can buy, I would probably do it between now and January, February, if possible. Nothing wrong with doing it later, but again, it just means you might not get as good of a deal. Otherwise, if you're not comfortable with this market, it is okay to rent for a while and see what happens, see how you feel about it. Buying is only good if you guys or whoever is in the frame of mind that you want to buy. if you're just buying just because you feel like you need to, because of for whatever reason outside of your personal situation, I think it can be a potentially a bad decision just from the emotional side of it, like kind of going through the regret, like, should I have done that? But if you're prepared, you're ready to go, I would do it in the next 2 or 3 months before it gets a bit more hectic, in my opinion. I think that's good for now. If you have any more questions, you can comment below as well. I've got my contact information there as well. If you have questions about relocating, I would love to help you. I can do that at any point. We can do a Skype call. We can do a Zoom call. Do all kinds of stuff to set up. Talking as far as how to forecast, how to relocate here. I go through all that in great detail because I do that all the time. So, if you have any more questions, drop them below. But I will end the chat now. We're about 8:40 now. I've been talking for 40 straight minutes. And I hope you guys have a great Wednesday and great end of your week. And we'll be talking as we go into the holiday season. Enjoy your December and Christmas lights hunting season 2 and gift giving. So I will see you on the next video.